Hi everyone. Okay, so talking about the Nova Scotia low income tax reduction. As I've mentioned, I know once or twice, if not a gazillion times, especially over the last two terms, you're actually probably getting tired of hearing it. But anyway, always go to Canada Revenue Agency as your source for tax, payroll, anything like that, because you can guarantee if there's any changes or adjustments or modifications, Canada Revenue Agency is going to be the source that will be the most up to date. You never know for sure if everyone else is. And one thing that I've actually come in contact with in the past, that a lot of times other providers, such as software package providers, don't always have the per diem expenses set up right away, like for moving expenses and such. Anyway, that's kind of an aside. So for now, what we're going to do is we're going to go into Canada Revenue Agency, because before we automatically assume that just because we have a low income individual and it fits the threshold, we still want to make sure that they actually qualify. So we want to go to the website to see if there's any requirements or stipulations in order for them to qualify for that tax reduction. Okay, so we're going to, so what I clicked on there, just so you know, you're familiar with this area and you're familiar with this federal income tax benefit information. So right here, we've got the Nova Scotia tax information. So that's anything that's on the NS 428 to be able to look up and see what information is available. So I'm just scrolling down. There's the different sections, as you know, on the NS 428. And we want to go down to Part C for the Nova Scotia tax. And we've got here the Nova Scotia low income tax reduction and then the adjusted family income calculation. But we're going to click on this first one, Nova Scotia low income tax reduction. So we click there. And you can claim the Nova Scotia low income tax reduction if you were a resident of Nova Scotia on December 31st and any of the following conditions apply to you. One, you were 19. She wasn't. You had a spouse or a common law partner. She didn't. And you were a parent and she wasn't. Okay, so therefore, none of them fit her, her being Sue Brown. So therefore, you can't claim that that reduction in tax. Okay, so pretending that she did, I want to go over and have a look. So we've got her here, and what I did was I went in. I'm actually using a software package. I'm using UFile, and I've gone in and set her up with the birth date. I just changed it. So in the information that you have, she's set as being born in 2005, I think, and I changed her to 2004. Okay. So because she's now 19, she can claim for herself. So as you can see here, you'd put in the information for the low income adjustment. So we've got her income from line 23,600 and brought down. She does not have a spouse, so therefore the adjusted family income is the 17,982. Bring down the amount from line 60. If you scroll up here from the previous page. So line 60 is the amount of actual income tax, Nova Scotian income tax that she owes. But if you look here, the amount of the non-refundable tax credit from line 48 goes here, so brings that over. The amount from line 8, which was where we calculated the amount of tax here. So when we come down here, no tax is owed. So that's why when you come here to line 67, there's no tax. So therefore, because they don't owe any tax, even calculating the amount that they qualify for the Nova Scotia low income tax reduction doesn't change anything. Okay, and I know some of you had this correct, the 0, subtract 150.90 to give you 0. Some of you actually still put the 150.90, even though it says, and didn't put it even in the negative, but it says if negative, enter 0. Okay, so most of you did put the 0. A couple of you actually gave Sue Brown a spouse. Doesn't have a spouse, so that line should have been left 0. I mean, none of it should have been calculated, but that's okay. But just so you know for the future. And notice here as well, so they can only claim themselves and one of the other. Okay, so the highest number that can be there is the 600. But ultimately, no amount should have been put through here because they didn't qualify. They weren't 19, they didn't have a spouse, and they didn't have a dependent. Okay, so yeah, so in the future, again, not everything is going to be covered in my information. Just like in a real tax return from a real individual. So if you had been involved in a clinic, say, and was given this information, you have, before you automatically gave this individual that $300 credit, you'd need to look and make sure that they qualify. And again, once we switch to the computerized, it'll automatically know. And that's why putting in their birth date is so important, because it will make so many decisions based on that base information that you give them. Give them as input in the software for the computer software to calculate their return for them. Hopefully this has helped, and let me know if you have any further questions. Thanks, everyone.